Traders Corner is brought to you by IG.
Welcome to Traders Corner. As always, I'm joined by Garth McKenzie, founder and editor of Traders Corner. Garth, welcome.
Hi, Julieta.
Garth, we're going to start off talking about the S&P 500, which is interesting in that it's completely uninteresting and it's gone nowhere for a very long time. So why do you want to start the show tonight with this particular chart?
Well, it is interesting and uninteresting, as you say. We always look at the S&P 500 from a bigger picture perspective, just to sort of lay the foundation for the show, as it were, because the US markets are very important to follow because they do tend to set the trend for a lot of other global markets as well. What's interesting this week, however, though, if we look at the S&P 500, is that, or as you said, uninteresting, is that the fact that the S&P 500 has just gone sideways in a range of less than 1% for 12 days in a row. The last time this happened was in 1972, so that was 44 years ago. Before my time, and I suspect before yours as well.
Yes, indeed.
So, I mean, it's quite unusual to see the market going sideways for such a long time. And the question is now, are we going to break out to the top of that range or the bottom? Because at some point, look, the one guarantee I can give you is that it will break that range. It's not going to stay in this 1% range forever, and probably not for much longer either. So it's either going to break up or it's going to break down, and the big question is, which way will it break? We've got the stochastic, which you can see at the bottom here. It's very, very overbought. It's been overbought for the whole of July, and it's now just started to turn lower as we go into August. But that's not to say that this might not still pop to the upside.
But I suppose if it hadn't already, then are the chances of it doing so less likely?
Well, this is the big debate, right? Because I look at that and I say, well, ordinarily I would think the higher probability is probably that it's going to break to the upside. But having said that, if it hasn't done it yet, is it going to do it? Is it maybe telling you that the sellers are strong enough to keep the price down, and therefore they might push it out the bottom of that range? I don't know what the answer is. It's a 50-50 at this stage. We'll have to see over the next couple of days what it decides to do. But I think if it breaks to the downside, then we've got this dotted line over here, which is 2120. That would be a support level for the S&P 500. If it breaks to the upside, and the upside here would be at around about 2175 or thereabouts. If it breaks through that and pushes on higher, well, then we're probably going to 2200 or maybe a little bit beyond that even.
And what about the local market? Because we seem to be doing the opposite, and that is breaking to the downside in a fairly definitive way.
We certainly are. A lot of this has got to do with the fact that the rand has been very, very strong in the last week. I mean, look at it. We're now sub 14 rand to the dollar, and we're down at like 18 rand 30 odd to the pound. So the rand is very, very strong, and that does weigh on our market because we've got so many heavyweight stocks in our market that are dual listed in London or that earn their revenue from offshore. So it's not too surprising, therefore, to see that the top 40 has been rather lethargic, and it's certainly nowhere near all-time highs at the moment. What's interesting for me is that if you have a look here, I've drawn these resistance and support lines through what are closing levels on the top 40 index. So that's why you can see this spikes to the outside of this rising wedge pattern. But basically what I want to highlight there is the fact that the top 40 has been trading into this rising wedge pattern. It has now begun to break to the downside, as you can see quite clearly there. And we're now starting to also move off very, very overbought levels on the top 40. Also, what is notable is that we had negative divergence evident on the stochastic up here. And that is where your stochastic oscillator makes a lower high, yet the price was making a higher high at the same time. And that divergence it implies that the upward momentum is slowing down. And usually it does precede a change in trend. So the break to the downside here is not entirely surprising. But I think we need to see what happens around this 200-day moving average on the top 40, which is at around about 45,700.
Okay, that kind of tees up the show, all the trades that you've put on for the portfolio. But before we talk about this week's trades, let us congratulate you on last week's trade, which was a long position that you took in DRD Gold.
Yes, this worked out very nicely for us. We still are in this position, but let's just quickly revisit it and have a look at why we did this trade. There's no secret that gold shares have been the strongest area of the market this year, and they've been performing well. The trend is very firmly up. And what we saw with DRD Gold last week was the fact that the share price had been consolidating into this falling wedge pattern. And typically these falling wedges are continuation patterns within a rising trend. So in this case, you've got a rising trend, then it spends 2 or 3 weeks consolidating into this falling falling wedge pattern. The likelihood is then that it's going to break to the upside to continue that trend, hence the name a continuation pattern. And ordinarily we look for the price to go back to the prior top as a first target, if not possibly a little bit higher. So what we did last week was we went long of 3,600 CFDs at 10 Rand 28. The stop loss was 9 Rand 50, which is quite loose, but I was looking for a move up to 12 Rand 50 here. Now, it's working well. We're trading up at about 11 Rand 50 odd today, so it's looking pretty good for us. It's on its way to that target, I believe. You can see that the stochastic here still has some way to go before it becomes overbought. Also, there was this positive reverse divergence evident on the stochastic, which is a bullish sign. So all told, it's working well for us. We're on the right side of this trade, and I think we're probably on the way to going to meet that target at 12 Rand 50, and then we'll look to bank profits on it.
I mean, but if anything were to happen, would you maybe introduce some sort of trailing stop loss? Well, hopefully you would do that before something happened, but is it something that you've been considering? Because you don't want a trade to work and then suddenly not work anymore. Yeah,
often what does work is to look for a prior 2-day low as a point to put a trailing stop loss. So what you look at here, from that breakout that we saw last week, you can see that the share price has not breached below a prior 2-day low since that point. So that would be quite a useful trailing stop loss strategy to employ in order to keep us in the trade if it's moving higher, but also to help us exit the trade and at least protect the profits in the event that the price does roll over and begin to turn south.
Yeah. Okay, well, nice. The singles are accumulating themselves. Yeah. Garth, so onto this week's trades, and they are both short positions in two stalwart stocks of the JSE. So the first is Truworths. Why are you going short of this one?
Yes, this is Truworths. So the chart is up on the screen at the moment, and what's quite clear here is this share price has been trending lower for the last couple of months. You can see it peaked in April this year, and ever since then it's been making lower highs and lower lows. That uptrend is quite clearly visible over there. You can see how it joins the high in April, and again in early June there was another high. And now again over the last couple of days, the share price of Truworths has been bumping up against that downward trend again. And what's very evident over here is that there's been long tails to the upside on the daily candles of Truworths here. Those long tails to the upside indicate that there's been selling pressure up at the higher levels and profit taking. It's notable that those long tails are happening at this main downtrend, and also the fact that it's at the underneath of the 50-day moving average here. From a technical pattern perspective, we've got a rising wedge pattern that's evident over here, and a rising wedge pattern that occurs in a downtrend like this is typically seen as a continuation pattern. So a little bit like we saw with the DRD, where a falling wedge is a continuation pattern within an uptrend. Yeah. This is the opposite now. Okay. We've got a rising wedge that is a continuation pattern within a downtrend. And typically we would expect this to break to the downside and go on to make, probably to go towards the recent lows actually. From a strict technical analysis point of view, that's where it should go. Also notable is that there's this negative reverse divergence on the stochastic here. And again, this is also the opposite to what we saw on the DRD setup. So a negative reverse divergence is where our stochastic oscillator is now more overbought on this rally than what it was on the previous rally, yet the share price is at a lower level. So that is usually a warning of another leg to the downside to come. Now we have seen the share price starting to move lower today, and it looks as if the trade is working in our favor at the moment.
So you have entered the trade already?
I've entered the trade. I did this about 2 days ago for the portfolio. So I've gone in at 89 Rand 80. And my thinking there was really, I was noticing the long tails to the upside on the daily candles, thinking that this is at downtrend resistance now, and it looks likely that it's going to probably head lower from here. So I went short at 89 Rand 80 with a stop loss at 92 Rand 20. And my target here is 83 Rand. So I'm not looking for it to go all the way back to the prior lows. I mean, if I was, that would imply that we could see it move all the way back down to 80 Rand. Who knows, that might still happen, but I'm not going to be greedy for that. I just think that right now there's potential for it to move a little bit lower. And if I can get out at about 83 Rand, I think I'll take that. That gives me a decent risk to reward ratio to work with here. Yeah. Well,
I mean, take us through the mechanics of that trade in greater detail, because it's also, it seems as if this is kind of the trend of your trading this year has been, you know, you're not aiming for the sixes or the fours, to reuse the cricket analogy, but just hitting those singles.
Absolutely, and it's been working quite well for us, as you'll see at the end when we show the portfolio. So I've gone short here at 89 Rand 80. My stop loss is 92 Rand 20. My risk per share is 2 Rand 40 per share. I'm risking 1% of our account. Now, we've got 283,000 Rand in the account at the moment. So that allows me to, if I'm risking 1% of that, it allows me to risk 2,830 Rand. If I take that 2,830 Rand and divide it by 2.40 Rand, that gives me 1,179 shares. So I'm rounding it off to 1,180 CFDs. Okay. My target is 83 Rand, and that therefore means that my risk to reward ratio is 1 to 2.83, which is decent enough.
Yeah. Okay, so that's the first short. What about Remgro, which is the second?
Yeah, Remgro also, we've done a short here as well. And here we're actually looking at the technicals slightly differently. Really and truly, Remgro has been very range-bound and very choppy over the last number of months. There's been no particular trend here. But what is quite useful to use in a situation like that is what we call Bollinger Bands. And you can see the 3 bands indicated on this chart. You've got a middle band, and then the 2 outer bands. Now, what this is, the middle band basically is a 20-day moving average of the share price, and those outer 2 bands are a 2 standard deviation move away from the 20-day moving average in the middle. And what's quite interesting to note how well your Bollinger Bands tend to contain the trading action in a sideways market like what we're seeing over here. And you can see it very clearly how both at the tops but also at the bottoms, how your Bollinger Band has contained that trading action. The red arrows at the top here indicate the times where the Remgro share price has moved up to the upper Bollinger and then reversed down from that. And it's done that again over the last couple of days here. We've also noticed that this share price has begun to break the upward trend that goes back to the beginning of July. And we're very overbought on the stochastic oscillator over here, and it's beginning to turn down. So all of that to me signals that we're probably going to turn lower on the share price here, and we are beginning to move lower. And I'm looking for a move back down to around about 250 Rand here, which would really just be a move back to the middle of that sort of trading band, as it were.
Yeah, not to the sort of second standard deviation.
No, I mean, look, it may very well go to the bottom Bollinger Band, but I'm not going to be too greedy for that, because sometimes you find a situation like what we saw back there in late May and again here in late June, where the price comes down from the upper Bollinger, but then it doesn't get all the way to the bottom before it turns up again. So I'm not going to be excessively greedy here. I'm going to look to take profits if we get to 250 Rand, and I'll be happy with that. Okay,
so then once again, the mechanics of this trade, Garth.
All right, so I've gone short at 263 Rand 22. My stop loss is 267.50. My risk per share, therefore, is 4 Rand 28 per share. My risk, again, is 1% of our account, so 2,830 Rand. I divide that capital risk and I divide it by the risk per share, and it gives me 661 shares. So I've rounded it down to 600 CFDs in this case. My target is 250 Rand to the downside, and that therefore means that my risk to reward ratio on this trade is 1 to 3.09.
Okay, decent. So those are, decent. And I suppose together it's 2%, which is generally what you, the maximum that you allow yourself to risk on the portfolio.
That's right. That's it. Exactly. And like you said, we've kind of been hitting singles this year. It's been a year of capital preservation. I think we've done that well. We're certainly not looking to hit anything out the park at the moment. But the strategy of hitting singles has been working quite well for us.
Well, that tees up the next slide. Yeah. Hooray.
Yes, hooray. We're at a new high for the year. You can see that our portfolio is sitting with 291,000 Rand in capital now, which is up 16.5% for the year to date. So that's it's about 5 percentage points higher than where we sat last week. And that's because of the strength in the DRD share price. And then, of course, the Truworths and Remgro trades that we've done this week are both in the money now and are looking quite good. So we're comfortably on the right side of both of those.
Yeah, nice one, Garth. And then just to end off, you told the market or the viewers about a weekly email that you're going to be sending out detailing tonight's trade, so maybe just go through that again.
Yeah, that's right. We'll put this up each week, but basically for long I've been asked by people, please can you give us a heads up on what's going to be discussed on the show and what trades you're going to be doing on the show. So we've answered those requests. We've created a free email list for people to subscribe to in order to get a heads up of what we're going to be discussing on the show each week and what trades we're going to be doing. You can go to my website, traderscorner.co.za, and there in the middle of the page you can see there's a link to a free weekly email. Go and click on that, and that will allow you to subscribe to this free email list. We won't spam you. All you'll get is an email once a week on a Tuesday detailing what is going to be on the show each week.
Okay, great. Garth, we'll leave it there. Thanks as always for joining us. Garth McKenzie is founder and editor of Traders Corner.
Traders Corner is brought to you by IG.